Welcome on board Sandip Sabharwal as well. And Sandip, morning, let's talk about this Bain Capital acquiring joint control of Manappuram. Interesting development. You think the stock perhaps will now trend towards the open offer price of 236, largely sentimental positive?
So, Aisha, I think it's not a sentimental positive. I think it's actual positive because it involves a significant uh, capital inflow into the company, which like 4,300 crores odd, which is quite significant and will add growth capital to Manappuram. So, Manappuram capital adequacy was as it is good, and this adds more capital and it reduces pressure on any IPO requirement for the microfinance subsidiary, which can be now restructured and I guess I think the peak of the stress in the microfinance industry, as per most management commentaries, should be happening now. From Bain's perspective, they come in at a good price because I think price to book is just around 1 times, and for a company where the business is largely secured, so I think it's a relatively safe NBFC. Gold loans are one of the very secure businesses, and from the perspective of minority shareholders, I think it's a significant positive because the valuations are not very expensive given the quality of businesses in which Manappuram is, and the growth could pick up. So my guess is that the stock should trend higher and move even higher than the open offer price going forward.
Interesting.
Sandeep, you've been bullish on the market. I remember we had a conversation where you explicitly mentioned that, look, I've made my cash levels zero, and we've seen a comeback in the market. But in the near term, is this as good as it gets? Because we are not in a runaway bull market. I mean, the markets are oversold, they've come back. Have things normalized now? Is it time now to start taking some chips off the table?
Not really. So I would agree with you that it's not going to be a runaway bull market, and it should not be because I think it creates excesses in the markets, and then the corrections tend to be very rapid. I personally don't like very aggressive market moves. I think the initial moves are always led by short covering, and which is something which we have seen. We have seen a comeback by financials, which was expected. So I think IT is one big part of the index, which could still be a drag and not participate so much given uncertainty around the US economy. So, but I think there'll be pockets of outperformance in the recent days. We've seen increased impetus by the government also in pushing some projects like now on the railway side also there's talk of more investment. On the defense side, big projects are getting cleared. Some companies have started reporting new wins in infrastructure, road projects, pump storage, and all the focus areas of the government. So I think things are not as bad. And next year, I strongly believe there'll be a comeback in consumer demand driven by the lower taxation, lower inflation, as well as the fact that the base itself is lower. So there's no need to be excessively pessimistic in this market. And the big trade of a shift of money to the US and US assets becoming a huge proportion of global asset values, that will also reverse because we've seen what's happened to the US dollar index. Typically, the flows follow after the event has happened, not they don't create the event. So we'll see a comeback by foreign investors into emerging markets also. Now, the 2nd April uh, issue still remains where we need to see what tariffs get imposed on what industries or what companies out of India. That's something we still need to watch out for, and that could impact specific companies negatively. But overall, I think things are fine.
Will outperform in this rally. Banks is one port of call which everybody knows and everybody is talking about it. What else do you think has potential to, let's say, add a quick 10% or maybe 15% by the end of the year?
I think the infra companies should see a comeback because capital good in infra. We've seen 30-40% sell-offs also in some good quality companies out there. So I think that's one segment which could see a comeback because interest rates will also come down, and many of these companies, the working capital rates directly reduce. So uh, there was a 25 basis cut in April. Mostly there'll be a 25 basis cut, most of 0.5% interest rate reduction combined with improved liquidity would be very beneficial for the infra companies. I think on the auto side also, we'll see a comeback. Again, this 2nd April uncertainty on what happens to duties, etc. remains. But in the near term, I don't see much impact of foreign competition immediately. And at least on the two-wheeler side, there'll be none. So I think that's where some value could still be there. Among specific companies like financial, we talked of like Bharti, Reliance. I think both of them should also contribute towards the performance of the index, and both of them seem well placed.
Sandeep, other than banks and NBFCs led by the big ones like a Bajaj Finance, where else do you think there will be a sectoral move coming in if the market's rally is to sustain or rebound is to sustain?
I think we should see participation across the board. So I think Reliance becomes the biggest factor. So that's been one stock where there have been starts, but then the stock has not picked up on the starts and has been languishing in a range for some time. So I think that's one stock. Bharti is another stock which is actually at the upper end of the range, but again the outlook remains strong. Then I think L&T, some auto stocks. So I think a lot of these companies the interest rate sensitives will come back because as liquidity eases and as interest rates come down, it has a direct bearing on the performance of these sectors.
Interesting. Defense stocks as well, they've been seeing that move up, and especially some of the shipbuilding names, a GRSC, a Mazagon Dock. DAC, remember, has approved proposals worth about 54,000 crore rupees, and that's sort of giving a fillip to some of these defense names. Sandeep, anything that's looking interesting, or do you think there's lots more in the market and one can skip this sector?
No, I don't think we should skip the defense sector overall because there are opportunities and they will continue to. But all we need to be aware of is what valuation we buy the stocks. So I think among the more established PSU companies, Bharat Electronics is something we also actually hold, and I think there the results last quarter were very positive, and they've been continuously winning new orders and many new acquisitions directly or indirectly benefit that company. So I think that is one company which I think should continue to do well.
Sandeep, I don't know if you went through Accenture's, commentary while they've raised the lower end of their revenue guidance. But just going by the commentary, you think Indian IT also is in a void, or you don't think there's a apple to apple correlation here?
There's no apple to apple because Indian IT companies don't get much revenue from the US government where Accenture does. But then on the read through, I think whenever there is uncertainty, discretionary spending again gets impacted. And the comeback of discretionary spending was the big story for IT companies. Most of the managements indicated that in the last result commentary. But I think if that again fades, then the growth prospects again get impacted. That said, I think many of the larger companies like Infosys, TCS, etc., also have corrected significantly because of this news flow. I think they are down 20-25% from the top. So I would think that downsides from current levels could be limited, but in the near term, there are no upside triggers also. So I think more range bound. I don't see a big fall in many of these companies, but I don't see any triggers for them to rise significantly also.
All right, so let's watch out for the IT names. But Sandeep, you were just touching upon the auto space, that looks interesting to you right now. Help us understand that where is that you are finding value at this point in time, because though the price hike announcement within the passenger vehicle segment is not getting the excitement back into the stock prices, but it's some of these two-wheeler counters that are inching higher. Case in point being Bajaj Auto, and today CLSA has also come out with a note highlighting that they also prefer Bajaj Auto within the two-wheeler pack. But help us with your take on the autos and your preferred bets.
Yeah, Bajaj is my preferred bet also, and that's something which we have been bought over the last couple of months also, although it's trended down, but I think it should do well. I would think that even Hero Moto, Eicher are well placed, and they should also do well. So I think two-wheelers are insulated from this entire tariff war story also. On the four-wheeler side, M&M continues to be the preferred bet, so that's something which we hold. Maruti, I think, also is in decent value zone. Tata Motors also has corrected significantly, but lacks triggers for performance in the near term. But that's something we need to watch out for.
Sandeep, other than the large private banks, any PSBs that you may have added to the portfolio after the recent fall?
No, not really. I don't buy too much of PSBs, but I think if one has to take a bet, I think SBI could be the only one which could, because that's also corrected decently. It's been languishing. It's not participated as much in the comeback as some of the other private sector banks. So there could be some catch up there potentially.
Good to have you on the show as always. We'll let you go on that note. Good speaking with you.
If you like this video, then like, share and subscribe to ET Now.